Welcome to the Lifestyles Unlimited Real Estate Investor Radio Show, a real estate investment program. Listen and learn how to use real estate to build wealth and passive income streams for you and your family. We bring you experts every day to discuss and answer your questions on everything from single-family homes all the way up to 600-plus unit apartment complexes. And now, the Lifestyles Unlimited Real Estate Investor Radio Show.
Good afternoon and welcome to the show. This is Andy Webb with Lifestyles Unlimited. And as always, we're working on your financial freedom. Financial freedom. I love it. I'll get to that in here in just a second, what we're up to. But I'll tell you, in order for you to achieve that financial freedom, I need you to start thinking about your current investment strategy, if you have one. Is there a strategy there? And your current investment portfolio, again, if you have one, how is it doing? Is it going to get you to retirement sooner or later or at all? Retirement age per the government, it just keeps on easing up, doesn't it? So you can get there sooner or later or at all. Do you maybe need maybe a more effective option? Something that, for example, can get you a 100% return in just a few months. Sounds crazy. I know it does. Stay tuned. Really, I do need you to think about this. How is your investment portfolio really doing? Sure, stock market, it's pretty hot right now. It's on fire, hitting all-time highs again and again. For now. But we've seen what that roller coaster does, and I have to ask again, is it really going to retire you sooner rather than later? Or are you going to wind up staying on that conventional path, continuing to feed that retirement machine in hopes of retiring? And really, you're just going to keep plugging away and plugging away. Look, on today's show, I want to look at a concrete real estate investment opportunity that crossed my desk, caught my eye, and we'll look at some of the numbers with you, the numbers around that deal, so that you can then compare that with your current strategy. So again, I need you to think about that. What's going on in your portfolio right now? What is the strategy? How is it performing? So we'll look at some numbers so you can compare and contrast. And yes, we will talk about that 100% return. But before we get to that, first and foremost, I do want to wish everybody out there a happy Easter. I hope you're having a great day with your family. We already did the egg hunt. Easter Bunny made an appearance, dropped quite a few eggs, got them all rounded up. And in fact, we're doing that out in East Texas. I am coming to you live from the RV bunker, and we're in Canton. Canton is a little town about, 45 minutes east of Dallas proper on I-20. And if you've never been out here, if you're not familiar with Canton, Texas, they've got a big event at the start of every month. It's called First Monday Trade Days. Whenever the first Monday falls in a calendar month, that prior weekend is First Monday. It's a huge, huge flea market. And of course, back when COVID rounded the corner about a year or so ago, things kind of paused, right? Took a little bit of a break. But I'll tell you, we got out here on Thursday ahead of the Easter weekend. Didn't even realize it was First Monday weekend. Forgot about it. But lo and behold, it is First Monday. So we took a trip out there on Friday, and I was just astounded at how packed the place was. It was overflowing. A lot of trading going on. So things seem to be getting, in my view, at least right here, getting back to normal a little bit. We've got the home opener on Monday, tomorrow, for the Texas Rangers, opening at 100% capacity. The governor lifted the mask mandate, said, hey, we're open for business. The Rangers are now as well. And of course, thinking more macroeconomically across the nation, I'm sure you heard the news, the job report. Wow, that was something else. Expectations, I forget exactly, were around 675,000 new jobs were expected in March. What did we get? 916,000. Almost 1 million new jobs in March. People added to the payrolls. And that's great news. That's great news. And when I think about First Monday, when I think about all the business here in East Texas that benefits from this type of flea market, right? We're talking about Airbnb, we're talking about hotels, we're talking about motels, we're talking about mom and pop restaurants, we're talking about the chain restaurants, all that business. A lot of those people are the ones in the leisure and hospitality branches of our economy that really have been suffering more so than anybody else. And, well, naturally, as part of this big pop in jobs, that was a big piece. Gains were strongest in leisure and hospitality. And, of course, as well, construction, because we know what's going on in the housing market. It's a madhouse out there. So good stuff for places like Canton, Texas. And we're seeing that other developments in a move to normal. If you are already a residential rental owner, maybe single family, maybe multifamily apartments, you may have already heard this. Texas Supreme Court has let the emergency order number 34 expire. And this emergency order, what it basically did is it said, all right, state of Texas, JP, Justice of the Peace judges, those are the ones in Texas that handle the eviction cases, you're going to follow the CDC guidelines. That's what the order did. It basically said, yes, we're going to take that national measure, we're going to apply it to Texas. That has now expired. They just let it go. So, in essence, now the local courts have been given direction just to stop following that. So you as a landlord, if you own rental property, if you have residents that maybe have gotten behind and you've considered the eviction route, maybe have already started down that path and found that was put on hold. Bottom line, housing courts in Texas are no longer authorized to halt evictions in compliance with that national moratorium. Now, that national moratorium is still in place. So you need to give some consideration before you move forward with that held or that eviction that is on hold or filing a new one. Am I putting myself at risk? Is my resident somebody that falls under the protections of that CDC guideline? And that, of course, would be a question for you to take to your real estate attorney for greater clarification. But for me, the overall picture is a return to normal here at First Monday Trade Days, the jobs report, the economy on a whole, Texas Supreme Court letting that mandate expire, that emergency order, a return to normal. But what about you? Are you ready to return to normal, to the same old, return to the grind, that conventional path, feeding that conventional retirement, or is there an alternative? We're going to talk about that when we come back from the break. Stay tuned.
Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show. Now, let's get back to your map to financial freedom.
Welcome back to the show. Your host, Andy Webb. And today, it's Easter. Happy Easter to you. I hope you and your family are having a great day. I can tell you ours. We've had a great day so far. Spent the morning chasing down those Easter eggs out here in a field in East Texas. And we're talking about First Monday Trade Days, some of the things we're seeing in the broader economy, and things seem to be getting back to normal. And my question to you is, what are you doing? Are you ready to return to normal? Are you ready to resume if you've stopped feeding that same old retirement nest egg, that IRA, that 401k, that stock portfolio, that conventional path model for retirement? Or are you going to take the time now and get ready to arrive what I'm going to call the real estate wave? I'll tell you, the fundamentals are there if you're getting involved in the right markets, like Texas, like Georgia, Phoenix, Arizona, right? The Sun Belt. That's where people are moving. People are moving there. Businesses are moving there. Texas is a business-friendly state, a landlord-friendly state. We've seen that with the move that the Texas Supreme Court took. They're clearly moving in the right direction. So I want to talk about that a little bit more. And then I want to get into the lifestyles model and look at a concrete deal that will show you a better way to start to build that better, non-conventional nest egg for retirement. If you have any questions today, let me give you the number here. It's 855-497-4335. Again, 855-497-4335, or send me an email to askandy@luinc.com. And again, coming to you live from Canton. I'm in the RV bunker. We're actually preparing for a trip west, out to West Texas, to more desert-like climes, hoping to dodge the allergies that seem to plague me here in North Texas this time of year, and my son now as well, we're learning. So stay tuned. Each week, I'll share what we're observing, if there's anything relevant to you, the real estate investor, as we travel across the state. And here in Canton, it's interesting. We picked up some land some time ago with the intent of putting this RV bunker here. So that's what we're doing. And when we started kind of digging around, we talked to the Chamber of Commerce here. We said, what's going on in the market here? What do you see in terms of rentals, right? And they said, there's a dearth of inventory. We don't have enough. This was 2 years ago, 2+ years ago. People even back then were selling out in parts of DFW as the people from the coast were moving in and paying overpriced prices to get into these houses. Well, these folks are cashing out and moving out to places like here. Chamber of Commerce said, if you can get more rental property out there on the market, please do. And Canton, if you're not familiar with this, I would call it a tertiary market, not even secondary, but tertiary. And I bring this up because the deal that we are going to look at is, in fact, in a tertiary market around Houston. And as we've been building out the site here, we have an electrician out to put in a new panel for the 30 amp RV, putting in, checking the well, having the utility service out to check the lines and clearing the land, etc. Every time I ask these guys, what's going on out here? What do you see? And the well guy says, man, we are 30 wells behind. We cannot keep up with the demand. So it's been going on for a while. COVID-19 has accelerated this, and I find the numbers in these markets are great. In fact, we even invested in a multifamily deal as passive investors just 30 minutes up the road in a similar market. So again, we'll look at that deal. But first, I want to look at the Lifestyles Unlimited model. I want to make sure that you understand how and what we are buying and how that ties out to with single family, the 5 ways that we make money. And these will play into that specific deal that we will discuss. And then again, as I said, I want you to be thinking about what your retirement portfolio is doing when you hear the numbers that we're going to hear around this particular deal. Okay, how does your current strategy compare? So some key ideas around Lifestyles Unlimited in the model. Again, remember these. I'm going to mention them now. Remember these as we work through the show. First and foremost, when we take down an asset like the one we're going to look at, we're going to apply the motto of best product, best price. Whatever's ailing on that property, maybe it's a 1960s build that hasn't been updated since the 1960s. It's still got that green shag carpet, that old, the old windows. Maybe it's pier and beam. It's got the cast iron piping under there. We're going to go through there. We're going to fix everything that needs fixing, anything that could break in the next couple of years, and put the best product together. We're going to put it on the market at the best price. Maybe just a little bit under the market rent for that area. And because of those two things, we're going to get the best people into that property. And what we're seeing now as COVID-19 has reared its ugly head and is now perhaps receding a bit, a lot of the Lifestyles Unlimited investors have done very, very well because they apply this motto. They apply best product, best price, and they're getting the best people into those properties, and those people want to stick around. They like where they live, and they continue to pay. And if they're having difficulties, they and the rental owner work together. If you've listened to any of the Del Walmsley radio show during the week, he interviews commonly lead investors on Tuesdays, other investors as well, but commonly we'll hear from the lead investors and how are they doing during coronavirus. They're doing just fine. And that brings me to Del's 3 rules of investing. Number 1, don't lose money. Number 2, it has to cash flow. And number 3, you can't get rich slow. We apply these as we go along as well. And we'll tie that into this deal when we start to review that. And what we essentially do as part of the model, we're looking for a distressed asset or a distressed seller. And commonly, if the seller is distressed, I find the asset is too, because they're just not taking care of it. So we get it at a discount, and we go in and we improve the property that's that best product. And we may be doing this with multifamily apartments. We may be doing this with single family. We do it in both spheres, in fact. And depending on where you're starting right now, if you're not already involved in real estate investing, you'll have to sit down and look at the capital that you're beginning with. You may want to go straight into apartments. There's a huge wealth multiplier that apartments have that single family just doesn't have. But if you don't have the capital to go that route yet, start with single family if you have to. That's exactly what my wife and I did about 9 years ago when we joined Lifestyles Unlimited. Now here we are, real estate retired, bumping around in our RV bunker. when we want to. So again, we're going to get to the tertiary market deal now because I find these deals interesting. You know, a lot of people are too shy to venture out of their main city environment, whether that's Dallas, Fort Worth, or Houston proper, or San Antonio, whether you're out on the coast somewhere looking at Atlanta, Georgia. I saw a good deal actually in Georgia that was out a bit. Looks like a college town. I'm not as familiar with Georgia, but we do have a realty team now there as well that are sending deals my way. Good numbers. Good numbers. And I'm confident with the infrastructure that Lifestyles has built, if I decide to pull the trigger on one of those deals in Georgia or in Phoenix, Arizona, no problem. No problem. So let's talk about this deal. Again, this is in a tertiary market. This is a little bit southwest of Houston, and this just came across my desk a week or so ago from one of the Lifestyles realty team down there in Houston. And it's got a lot of information just in the single little email. And first and foremost thing caught my eye here. It says, appears only to need minor cosmetic updates. That's great. 1982 build. Makes sense. Newer property. The last couple of houses I personally have fixed up, they're 1950s. Needed quite a bit of a lift to get them going. Now the numbers. Well, I already mentioned 100% return. Where is that 100% return coming from? How quickly? We're going to talk about that when we come back from the break. Stay tuned. You're listening to the Lifestyles Unlimited Real Estate Investor Radio Show.
Warning. Listening to the Lifestyles Unlimited Real Estate Investor Radio Show will change your life. We will teach you how to create wealth and passive income so you can be financially free. And now, back to your host.
Welcome back to the show. I'm your host, Andy Webb. Happy Easter. It's a beautiful day out there. I've had a great day with my family so far, and I hope you have as well. I want to give you the number here in the studio. If you have any questions today, it's 855-497-4335, or send me an email to askandy@luinc.com. If you missed the earlier part of the show, I mentioned I'm coming to you live from Canton, Texas. It's a little town about 45 minutes, I'd say, east of Dallas. And we're hunkered down here in the RV bunker. This is where we come to get away. And we're about to hit the road. Go a little bit farther west, bump around the great state of Texas for a little bit. So stay tuned and tune in again next week, see where we're at, and I'll tell you if I'm seeing anything of relevance out west from the real estate investing standpoint. And I like Canton. It's a tertiary market. I haven't invested here. We are invested in a multifamily deal just up the road, and we're about to look at a deal that's southwest of Houston. Now, the numbers we're going to give here, they're wonderful. We do see these within the major metros as well. This just happens to be a deal that I pulled because it ties very well to where I am personally located right now, and I do like these markets. Now, I also want to tell you a couple things. Number one, if you missed the earlier part of the show, or as we start to go through the numbers and talk about some of the concepts around the ways that we make money and the ways that we build our portfolio so that we can become real estate retired, if you miss any of that or want to review that, you can always go to our website, lifestylesunlimited.com, and click on the radio tab and catch the archives there. Any of the past shows that I'm doing, Del Walmsley, or any of the other hosts. That's one point I want to make. Another point I want to make, again, as we work through these concepts, if you want to dive in deeper, obviously you can learn more about Lifestyles Unlimited on that same website, lifestylesunlimited.com. But I want to tell you about our Lifestyles Unlimited Wealth and Passive Income Expo. That is coming up this year in September, I should say, 3rd and 4th. That is Labor Day weekend. That's actually going to be in my neck of the woods in Irving, in Las Colinas, at the Irving Convention Center there. Great event. A couple of days and plenty of time for you to get out there and meet and network with a lot of successful investors. I can tell you at the last expo that I went to, 5,000 or so investors. I mean, plenty of people to meet with and to talk with and to build and to grow your network. That will help you develop as a real estate investor. But to our show today in particular, you can learn how to become real estate retired at any age. There are so many breakout sessions, small sessions you can go to learn about very concrete parts of the business. If you're focused on tax, You want to learn how to save on the tax side through real estate. There will be breakout sessions on that. If you want to learn about the hard money process that we're going to lightly talk through today, there will be breakout sessions on that as well. Multifamily, if that's the route you want to go as a passive investor, sessions on that. As a lead investor or independent investor, meaning you take down your own apartment complex as a solo. Anything you need to learn, you're gonna find it there. So today's show, we're gonna get into some concepts here. We've talked a little bit about some of the important models that we follow as members, as investors at Lifestyles Unlimited. But you can always come out and learn more at the expo. Again, that's the Wealth and Passive Income Expo. If you want to register or learn more, go to wealthandpassiveincomeexpo.com. And if you do register there, use the promo code Andy. That is my name, Andy, all caps. That'll give you $97 off any of the passes or packages out there. It essentially makes the general admission free. What do you have to lose? So, great event. I'm excited. It's a number of months off from today, but really looking forward to that. So let's move on. Let's talk about this deal. So again, this came through my inbox from one of the realty team down in Houston. I get deals from Houston, San Antonio, now Georgia, Arizona, and I'm always looking. And again, this one caught my eye just simply because the title on the email, it said 104% return on capital gain. That is amazing. So we mentioned this earlier in the show, and I asked you to please spend a little bit of time, maybe now, maybe after the show, thinking about your current retirement strategy and what kind of returns are you yielding as part of that strategy. If you don't know, try to find out. It's not 100% in a couple of months. I can guarantee that. So how does that work here? What I'm talking about is something called equity capture. And basically, we're buying, I mentioned already, distressed assets. We're finding those assets that need some work. We're finding those owners that are distressed and need to sell in a hurry and are discounting their properties because of that. We're getting in there, and then we're fixing them up, and we're creating value through that process. We're able to fix these up at very great rates, great prices, because we've got a wealth of contractors that we're able to tap into as part of the Lifestyles Network. So if you think about your portfolio, when you move your money into a new stock or a new bond, if you're still investing in bonds, or a new mutual fund, gold, maybe you make another payment out of your paycheck without even realizing it into your 401k account. Are you getting a 100% return within a few months? What about 75 or even 50%? 25% within 2 months? Probably not. And in this deal, this particular one, it's an over 100% return on capital gain. What does that mean? So basically, we've put in the capital to buy this thing and to repair this thing. Now, we're using other people's money. And because we're doing that, we're using something called hard money. In fact, I won't get into the details right now, but the net at the end of the day, to me, in terms of my cash into the deal, is just $24,000. But the capital gain that I'm creating by virtue of fixing that property up and by buying it right at a low price is $25,000. So my total equity when I'm done is $49,000. But I've created an additional $25,000 on top of the $24,000 that I've put in. Divide that $25,000 in additional gain by my cash into the deal, which is the $24,000, and you're getting that 104% return. Immediate capital gain due to the improvements to the property. Now, and again, this one's not a heavy lift. It's largely a cosmetic repair, probably 20, 25K. I would say it's 1,800 square feet, so it's a little bit larger footprint. Built in 1982, so we're not having to get in there and deal with the plumbing. We're not having to deal with the electrical. The panel's newer. Just the cosmetic stuff. So cash into the rehab into this particular deal is a little bit lighter. Now, sometimes we'll pick up a heavier deal. Maybe it's $60K in renovations because it's an older house, but we're buying at a lower price as a result of that. And we may also be in at $24,000 out of pocket. Whichever type property you're taking down, you just need to make sure that you're buying it and doing the repairs at those prices that then yield your target return. Now, is that 100%? That's a home run. I'd say, maybe moderate that a little bit. You don't want to pass on the good deals, just looking for the great deals. But at the end of the day, we've created equity by way of our process. And again, our process is to buy the distressed assets, typically with hard money, which is essentially a construction loan, high interest, allows us to get in, fix up the property, and then get it rented and refinance out of that construction loan into the long-term 30-year fixed rate Fannie Mae, Freddie Mac underwritten mortgages. And when I think back to what I mentioned earlier, Dell's rules to investing, number one rule, don't lose money. Have I lost money here? No, in fact, I've doubled my money. And that is a tremendous buffer. That $49,000 in equity that I'm sitting on, 25 of which I've essentially created out of thin air, that protects me if I do need to unload that for some reason in a hurry, if values drop. And just between you and me, based on everything I'm seeing out there, I don't think that's going to happen anytime soon. So, again, we're buying distressed assets, and that's what allows us to get in there with such an equity buffer, or equity capture as we call it, on the front end. Don't lose money, number one. Now, Dell's rules to investing, number two, it has to cash flow. How is this one cash flowing? So let me just give you a couple more numbers here. They have the value of this at the end of the day at $195,000 once it's fixed up. Asking price $139,000. We talked about the capital gains there. Once we've got it fixed up, got a long-term mortgage in place, got that new resident in place, we're going to be netting at the end of the day, after we've collected rent and paid our monthly expenses, we're going to be netting $400 every month. That's cash flow going right into our pocket. Now, how much cash are your current investments putting into your pocket or back into your investment account? Do you even know? Stay tuned. Let's talk a little bit more about this when we come back.
Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show. It's time to turn up the volume and fine-tune your passive income plan so you can create the lifestyle you've always wanted.
Welcome back to the show. I'm your host, Andy Webb, and I thank you for joining me today. We are in our last segment, so if you've got any questions, it's your last chance. It's 855-497-4335, or send me an email anytime to askandy@luinc.com. Now, we're just taking a look today at a deal, one of many deals that has crossed my desk recently. This particular one came out of the Houston Realty office for Lifestyles Unlimited, and it's in a market, what I would call a tertiary market, a little bit southwest of Houston. And I personally am in a tertiary market outside of Dallas right now, near a town called Canton. And we're seeing a lot of movement to these markets. And there's, just like everywhere else, there's a lack of inventory in terms of houses to buy, retail, and as well as rental inventory. And I had a concrete conversation with the Chamber of Commerce a couple of years ago here, even before COVID-19, and asked them, what's the rental market look like? Man, we need more inventory. If you've got anything you can put on the market, it's going to lease fast. So I strongly encouraged back then, and that picture has not changed at all. So we're looking at this deal, different market, similar market in that it's also a tertiary market, and great numbers. Just to kind of circle back, this is an 1,800 square foot house, 4-bed, 2-bath, no garage. Built in 1982. It's interesting. I notice when I drive around this area, a lot of the houses don't have garages either. They have carports that are just built onto the side of the house for one or maybe even two cars. Don't know if that's a East Texas thing, but maybe the same thing going on down southwest of Houston. So no garage, but 4 beds, 2-bath, a good size house, newer build. That's why the agent even wrote here, appears to only need minor cosmetic updates. Hey, that's great. I like a light lift. After repair price opinion. So this is the value we should hit after we fix it up, $195,000. Asking price is $139,000. So there's a decent spread there, especially given that it's a light cosmetic lift. And because of that, at the end of the day, when we're done, we're only $24,000 out of pocket to have taken down and fixed this asset. And by virtue of that process, we've captured equity to the tune of $25,000. More than we put into the deal, which is why we've got a 104% return on our capital gain. Now, I've created $25,000 in equity. I'm sitting on a buffer of $49,000. So to Dell's point, never lose money. Investment rule number 1, we've met that here already. We've bought at a discount, and we've created wealth. Dell's second rule, it has to cash flow. Dell's got 3 rules to investing. Number 1, never lose money. Number 2, it has to cash flow. This one absolutely will cash flow. Now, this is just a projection that the realtor put together based on market sales and lease comps. But in my experience, and I've been doing this with Lifestyles for about 9 years now, they tend to be conservative. So I would not be surprised after this house is fixed up if that value doesn't come in a smidge higher. And the rents, the cash flow doesn't come in a little bit higher. But right now, estimated cash flow per month into your pocket is $400. So this deal definitely cash flows. And I asked the question before, what about your current investment strategy? Is it putting money into your pockets, money that you can live off, money that you can really retire on? $400 is about the average that we see across Texas. Some are lower, some are higher. But on average, about $400. And this deal is smack dab in the middle. Now, let's say you pick up 10 of these. Now you're bringing in $4,000 a month. That's net cash flow. We're collecting the rent. We're paying our expenses. That's what we're keeping at the end of the day each month. Once you've met or exceeded your expenses every month with your cash flow, you are real estate retired. You keep on working if you like your job, but you don't have to. When you meet and exceed your income, you're real estate retired. And in fact, I mentioned the Wealth and Passive Income Expo the last segment. There was a class at last year's expo that was focused on accumulating or buying, taking down 10 houses in a single year. We have members that do that. You can do that too. And last point I want to make on the cash flow, we've gone in and we've followed the Lifestyles Unlimited motto of best product, best price. That means we've fixed up everything we think will need attention or could need attention within the next couple of years. We've gone in and done that CapEx, replaced that AC, done all the cosmetics, put in new fixtures, new dishwasher, new appliances, and so on. Everything that needs to be done. Put the best product on the market. And because of that, we have low to often no maintenance. And on a 1980s build, no problem. So when you hear people talking about tenants, taxes, and toilets, I had to call in at midnight. When you do things right, it's just not an issue. It doesn't happen. When you go in and put the best product out there, you're not going to deal with those calls. You're not going to deal with the maintenance. And even if you do have the occasional call, it shouldn't be a call. You want that in writing. Email's great. But you got a great network of vendors to take care of that problem for you and get it done fast and at a great rate. But this deal cash flows $400 a month. I love it. So those are 2 of the 5 ways that we make money with our real estate. Already, I would wager that we're beating the pants off of your traditional, conventional retirement portfolio. 100% return in just a couple of months by virtue of the purchase, rehab, refi process. And then monthly cash flow, $400 a month. That's $4,800 per year, by the way. Divided by our cash into the deal of about $24K, that's about a 20% cash-on-cash return. 20%. Great numbers. But that's not all. We mentioned we're putting a mortgage. We're going into a 30-year fixed-rate mortgage on the back end. And I have to ask you again here, thinking about your retirement portfolio, are you able to use other people's money to create wealth and prosperity for yourself? 401k, what are they doing? They're siphoning some portion of your paycheck every week, every couple of weeks, every month. That's not other people's money. That's your money. And now you can't get to it because it's locked up in that 401k. And if you try to get to it, they're going to penalize you for it. Now, if you've got a brokerage account, sure, you can borrow on margin to buy stocks. Watch out for that margin call. It's a little bit risky. If the market starts to drop, you're in trouble. So we use other people's money to get into these assets. And that's why our out of pocket on this particular deal is only $24,000. If you're a cash buyer, you're way above that number. And if you don't have a lot of cash, you're doing one deal. Whereas we can get into multiple, 10 per year even, as per the one class that we offer at the expo. So we use other people's money. And I did kind of backed into some numbers here based on what I see with the value here, $195K, assuming an interest rate when we go to do the refi of about 3.5%. That's about market rate now on a rental. That puts the refinance loan amount at $146,000. And based on that, we're paying a little bit, around $650 a month on the mortgage, $215 of principal reduction. That means every year, just rounded down to 200. That means in year one even, we're getting $2,800 just in principal reduction. That's happening in the background. It's not going into my pocket, but it's what we call equity buildup. And again, if I take that $2,800 for year one and compare that to my cash into the deal, $24K, that by itself is an 11% return just on the principal reduction. A lot of you do not have portfolios that are even doing that. So we've got equity capture, 104% return. We've got cash flow, 20% return. We've got equity buildup, 11% return. All these things roll together for a massive Massive return on just one single family house. And it gets better. Those are just 3 of the 5 ways. On top of that, we've got appreciation. Now, you will never get a deal from our realty team, I've not seen one anyhow, where they factor in appreciation and say, hey, if you hold this for 3 years, this is what your value will be. Why? We view that as icing on the cake. Yes, we know that real estate, roughly every 20 years, real estate doubles in value. But we're not looking at that. We like those concrete numbers, those things we know are going to happen. I know I'm going to create that equity capture. I know I'm going to get that cash flow. I know as my residents pay down the mortgage for me, I'm going to have that equity build up. Appreciation, well, that's probably what you're waiting for with your stocks, with your gold, with your Bitcoin or Ethereum or whatever it is you're holding digitally. That's all you can hope for is appreciation. Now, sure, your stocks might throw off a few dividends here and there. Gold, Bitcoin, that other stuff, forget about it. It's just hope, nothing more. Whereas with real estate, we can really lay into the numbers ahead of time and qualify that asset. And again, as far as this deal, like I said, I see nothing in here talking about appreciation. Now, if I want to think about it, if I run with a light number, 5%, right, nationally we're expecting 13+% in terms of price growth. Real estate, of course, is very much local, but if we just say 5%, which is not too off the mark for Texas in a normal year, 5% of almost 200K, well, it's about 10K per year in growth in the first year. Another great number. Tax advantages. We're not going to get into that today. There are lots of great shows. If you go out to our website, lifestylesunlimited.com, you can find out how we make our money and save our money, more importantly, through the tax advantages of real estate investing. So, hey, I thank you for listening today. It's a beautiful Easter Sunday out there. Have a good time with your family. Enjoy the rest of the day. You've been listening to the Lifestyles Unlimited Real Estate Investor Radio Show. And remember, it's not the money, it's the lifestyle.
The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented on the Lifestyles Unlimited Real Estate Investor Radio Show constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.